Good morning. Charmaine Watt coming to you live from Regina, Saskatchewan. Did you know that only 15% of Chinese people invest in the stock market and that real estate is the preferred asset for Chinese people? Because of the collapse of the stock market in 2015 and the devaluation of their currency, the Chinese people are interested in investing in the United States first, Australia second, and Canada third. Why do so many Chinese people invest outside of their own country? Well, there are several reasons for this. First of all, the affordability of our real estate. They want their children to attend they want their children to obtain a Western education, and they feel that it is safer investing their finances outside of China, and they are not looking for a quick return on their investment. They make a lot of sacrifices to save the money to buy a home outside of their country, especially for their children who will be coming to Canada to live while going to university. Most of these people like to invest in Vancouver or Toronto. It is estimated that 91% of the Chinese buyers searching for properties in Canada are looking in the $0 to $1 million range, and that 9% of those people are also looking over the $1 million range. However, a lot of these investors are not only investing in BC and Ontario, they are also investing in Saskatchewan. Why are more Canadians not investing in real estate for passive income? I believe it is because they have not been educated. Years ago, I asked my financial advisor about investing in real estate, and I was told that I could not use my RRSPs or TFSAs to invest in real estate, and that it was illegal. I wondered how this could be because I knew that pension plans were investing in real estate, investment trusts, which is also known as a REIT, R-E-I-T. A person only has to have a self-directed RRSP or TFSA to be able to invest in real estate, and it must be done at arm's length. Now, personally, I use Olympia Trust, which is out of Alberta. I know there are other ones out there, but my choice was Olympia Trust. Since then, I have invested in a variety of real estate investments, not only in Canada, but also in the USA. And it is really exciting to see my assets growing by double-digit returns. That sure is not happening in the stock market, or at least it wasn't for me. The following information is according to PwC Canada, and PwC stands for PricewaterhouseCoopers. Now, they are a very large firm. I believe they are number one or two business. They are the number one or the number two business in all of the world. So they are very, very large. PricewaterhouseCoopers, and what I'm going to talk about is what they expect to see for 2017. Now, given the state of the markets across Canada, where should developers and investors focus their attention? PwC Canada survey and conversations suggest that the most promising moves can be made in the following areas. Canada's economic performance appears to have rebounded from a weak 2015. The country's economy continues to realign itself as job losses in the natural resources sector have been offset by employment gains in manufacturing and construction. According to the Conference Board of Canada's Metropolitan Outlook, spring 2016, the national GDP is forecast to grow by 1.7% in 2016 and 2.3% in 2017, and then stay above 2% through to the year 2020. Housing starts nationally are forecast to fall to about 185,000 units in 2016, down from 195,000 units, and below the 20-year average. According to the Conference Board of Canada, housing affordability, weak income growth, and high consumer debt levels are all contributing to the dip in residential. Now, in the current market, industrial bets are widely seen as the wisest as the growth of online shopping creates more and more need for distribution and logistics hubs. While some worry it's tough to find property suitable for development, others point out that it's getting harder than ever to squeeze value out of office and residential development. How many of you are aware of the Global Transportation Hub just west of Regina? This is a distribution and logistics hub for Western Canada. It's large and they're not even done building it yet. Now, if you haven't seen it or don't know anything about it, I would encourage you to take a drive out west of Regina. Drive out on Dewdney Avenue West and you can't miss it. It's a huge development. It's very exciting to see also. Now, with rentals gaining in popularity, thanks to rising house prices and the demographic shifts, coupling with aging housing stock across the country, the market for purpose-built multifamily rentals is better than it has been in years. Our survey, which again is referring to PricewaterhouseCoopers, shows that the developers and investors increasingly sense the opportunity and are keen to get new rental projects going, provided the economics work. Now, with rising house prices, we are seeing more people living in apartments for longer periods of time. Very good for us as investors. Some of the solutions to these younger people not being able to afford homes right now, I would suggest that these people invest $100,000 into a joint venture on an apartment block. Say they have to pay 4% interest on the loan for 10 years. That works out to about $833 a month. They live in one of the suites in the apartment block that they are investing in, and they pay rent of approximately $875 a month for a one-bedroom. With the deductions that they can claim on income tax for the investment property, that will place them in a lower tax bracket, which may result in a tax refund. Now, on a 12-unit apartment block, you would only need four to six investors at $100,000 each. Refinance a building in 5 to 7 years, and these investors are on their way to financial freedom. Once the building has been refinanced, they will have received all of their investment back and still own the building. Now they can take that same $100,000 and invest it in another real estate investment, which will continue to grow their portfolio and passive income. As millennials and boomers alike flock to urban cores in search of a vibrant lifestyle, convenience, and proximity to work, respondents believe that the market for mixed-use properties combining residential, retail, office, and more is a solid play. Increasingly, developers will move away from viewing projects as one-offs, independent of their surroundings, in favor of building complete neighborhoods. We've seen that happening right here in Regina with Harbor Landing. Here are two opportunities to invest in Regina, right here, right now. The Rail Renewal Initiative, which is a 17.5-acre parcel of land on Dewdney Avenue between Albert Street and Broad Street. Old Taylor Field, which is approximately 8 acres. A number of respondents sensitive to the potential in an aging yet wealthy boomer population believe investing in retirement homes and other senior housing will be a growth opportunity over the long term. Whether they can do so at the scale needed to deliver both care and desired profits remain to be seen. Now, with my in-laws, we have them in a facility here in Regina. It's a lovely facility. It's a very large unit down by the Centre of the Arts. They are provided all their meals. Housekeeping comes in once a week to clean their suite, change their linens on the bed, which is just the sheets, the pillowcases, also the towels and the face cloths. And we pay over $4,000 a month for that service for them to live there. It's very nice. It's nice to know that they're in a safe, clean, healthy environment and that their meals are healthy for them. So the elderly people are spending lots and lots of money. Now, if I'd had my way, I would have put them in the College Park too, because it has the memory care area, which is huge because my father-in-law has Alzheimer's and he has had a stroke. Thankfully, he has no mobility issues, but with his Alzheimer's, I didn't want to be moving them a second time at this point in their lives because they're both in their 80s. So if we had actually placed them in the College Park 2 residence, they could have been in a secured area where my father-in-law would not be able to wander away. And at the point when it becomes my mother-in-law cannot watch after him, they have staff there, qualified medical staff, to take care of them. The other thing I liked about the facility was the fact that they actually have a nurse and a doctor that come to the site on a regular basis. So that meant you don't even need to take them out of the facility to have medical attention, which I thought was really nice for people that have mobility issues such as my mother-in-law. Now, about 2013, the town of Niverville, Manitoba, which has only about 4,700 people, not counting the farming community out around it, they built a $13.8 million care home without government funds. Now, this all came about because they were in a catch-22 position. They did not qualify for the government funds because they did not have enough seniors living in the community. The reason they didn't have enough seniors living in the community was that there was no facilities there for them to move into and stay there, so they were moving out to places like Winnipeg or other areas further away that had the facilities to accommodate their needs at that point in time. Now, this care home is an 80-bed facility, and it is the country's first special care unit tailored for aggressive Alzheimer's and dementia patients, which we all know is increasing as we get older. The town is only about 30 kilometers south of Winnipeg, and they did not have enough seniors. So their solution was they would build one. The community support, with the community support and builders agreeing to, give them a cut on what they were charging for construction rates, they were able to build the unit at about $150,000 per personal care bed, as opposed to the $400,000 per bed when the government builds it. Huge savings, and a very good strategy on their part, because it also drew businesses to the area, and it also means that that area now has jobs. So this is something that could be done right here in Saskatchewan, and in reality, any community that is willing to support this could do that. Don't wait until the stock market crashes to wish you had invested in real estate. Do it now. Real estate prices are down, which is a great time to be investing. If you would like to learn more or have questions, please contact me at charmaine.watt@sasktel.net. That is SHARMANE, WATT @SASKTEL.net. Don't forget to check out my website at www.tcestrategicinvestments.com. Remember, live your life by design and not by default. Until next week, take care and have a great day.